Welcome back to Market on Close. Let's talk some more about big swings in the market today, or maybe swings that are on the near-term horizon. Let's bring in Scott Bauer, the CEO of Prosper Trading Academy, for a little crypto chat on a Monday, Scott. So, look, stock's a little changed. We've got the bond sell-off going on, but crypto is kind of slowly creeping back to 10 after flirting with it over the weekend, coming back up. How many times can BTC get down to this level and get boosted, or is it like a matter of time before it breaks?
Infinite? I don't know. Obviously, the more times it doesn't hold, the worse off it is. What I find really interesting in the space right now is we know over the last few weeks, over the last maybe month and a half, we've seen the Bitcoin dominance just explode almost to record levels, meaning that, what percentage of all cryptocurrencies out there are Bitcoin? And this thing exploded to over 70%.
Yep.
So Bitcoin was going up, or the ownership, the trade in Bitcoin, while the altcoins were all, depressed or going lower. That maybe has started shifting a little bit here. We topped out at, 71, 72% dominance. It's now under 70. That doesn't seem like a big deal, Oliver, but this could be the start of something here where doesn't necessarily mean Bitcoin is selling off as much as maybe the altcoins, some of the bigger ones like an Ethereum, a Litecoin, even a Tether maybe, are going to start maybe catching up a little bit.
Yeah. Now, I think this is pretty interesting because we've seen, obviously, the dominance, as you point out, of BTC continue to climb. One of those, there's a lot of different reasons for it, right? Maybe the Bitcoin sort of maximalist view is coming to pass here, where the best use of the blockchain technology is as this kind of store of value within an asset that is Bitcoin. Or maybe the crypto community has just been piling all their bets into one thing. And to me, that might be interesting if, depending which one it is, because if that's the case, it's almost like BTC's become like the high beta way to play crypto.
Right. Right, or is it also a case of that Bitcoin really was that safe haven trade, right? That
like
just as people
crypto,
were flocking into gold within crypto, and now that there's a little bit of risk off even in the overall equity space as well, maybe we're seeing that in Bitcoin as well. I certainly don't know. I mean, we kind of have to let this play out to see, but I think it's an interesting dynamic what's going on right now.
So Scott, while everybody is, and again, people always think I'm a total nut job when I say this, but everybody's so focused on
you
the
and
bond.
me both.
Yeah, exactly, right? We're used to it by now. It happened long before the Bitcoin stuff too, for what it's worth.
Yeah,
the focus on the bond market basically comes down to whether or not the bond market is too sort of geared towards central bank expectations, and whether or not frothiness in bonds reflects, very consensus views about central banks continuing to accommodate negative yielding assets, buying up bonds, all this stuff. But to me, I wonder if in a way Bitcoin is actually the most kind of levered to central bank actions, because they essentially are saying, look, central banks are going to cut their way into oblivion. We're never going to need them anymore, and currencies are going to be useless as a result. So for me, it's like if anything is wrong, with the narrative that central banks are going to do all these extravagant things, it might show up in Bitcoin first. I mean, what do you think?
Well, you know what? It's interesting you say that, because I went back and I kind of overlapped a couple graphs because I was curious about this myself. And if you go back actually to 2012, you'll see the 10-year trading down to like 144, 145 in the summer of 2016, and basically the same exact spot in 2012. We didn't get quite that low just recently over the last couple weeks, but we got pretty close. Well, 2012, early adoption of Bitcoin, so you can't really look at that data. But in 2016, when we saw the 10-year drop to those historic lows, there was actually a very large increase in Bitcoin. We're not talking about the 10,000 levels because it wasn't trading there back then, but there was actually a large increase, similar to what we've seen on this run-up over the last few months as we've seen bond yields come way down. So again, this is something that down the road, when I say down the road, I'm talking years down the road when there's more data to actually be able to digest. there may wind up being some really close correlation between what we just saw in the bond market to what we saw in Bitcoin.
Well, this is interesting too. There's another chart that I like that shows that in late 2017, right before, right at the Bitcoin peak, and in fact, the Bitcoin peak happened on the same day as the short-term low in the 30-year yield, basically in late 2017 before it started bouncing. So again, I think to your point, look, the sample size is so small. I can't stand when people try and come up with correlations in BTC. But look, it's not unreasonable to think that if the Bitcoin story thrives off this notion of central bank extravagance gone wrong, and bonds are also expecting central bank extravagance, stocks are also and gold, all of them basically, that maybe BTC, if it starts dropping, it might show that maybe the economy's better. Maybe we don't need all these exotic tools if central banks are going to be able to kind of put things on brakes for a moment.
Yeah, I mean, economic fundamentals, honestly, are really the same across asset classes if you get a big enough sample size, which, like you just said, we don't really have that yet. However, I think you hit the nail on the head that there is going to be, in my opinion, this correlation, and it's yet to play out, but I think that we're going to see this. And to me, it's actually fascinating going back and looking at those charts, going back all the way to 2012 and seeing how closely correlated they were.
All right. Scott, always good stuff. Hey, that being said, by the way, short term, we're talking big theoretical stuff here. But lastly, I mean, if BTC is flirting with 10 right now and it breaks below, the trade has been to buy it because it pops back above. But if it keeps making lower highs every time, is there a point where you want to start trading the downside?
Yeah, I probably look to get in around 9,500 with a really quick stop, maybe around 93, maybe 92.50, because if it breaks there, then it really turns me upside down where that level becomes more resistance than it does support.
Yeah, all right, nice. Scott Bauer, really good stuff. Fun conversation talking crypto. We'll be right back.